Very good. Well, good afternoon, all. Good afternoon. I see folks coming in. Hope everyone's having a great Thursday. Today we are continuing with our bookkeeping session with the great Kate Odo. So it's been really great to have her provide the webinars on accounting and bookkeeping, and she said that this is her favorite topic, gross tax receipts. So we're very, very excited about today. We are the New Mexico Minority Business Development Agency. We support minority-owned businesses throughout the state of New Mexico, and we provide a series of webinars on top of all the one-on-one consulting and technical assistance that we do. So please go on our website. It's right there on the logo. I don't know if it's the left or the right of my face, nmbda.com. And there's a calendars page, and then all of our webinars are there. And what's so great about attending these webinars is that after you attend the webinar, you can communicate with us, either Sophia or myself, if you're interested in getting 3 hours of one-to-one service with Kate, and she can help go through your accounting, your booking, any questions you might have about your particular needs in business. So please let us know if you're interested, and we can make that connection in the coming weeks. So we are happy to have you, and I will move it on to Kate.
Hi, thank you for joining us this afternoon. Thanks, Gabriella and Sophia, everybody for being here. Really excited to get into this second part of the gross receipts presentation, focusing on something that is, in my experience, pretty widely misunderstood, or maybe even not necessarily business owners are aware of. And so destination sourcing is a really important part of most of our businesses. So I'm really excited to share this information with you. So I'm going to go ahead and share my screen. All right. Okay, so this is gross receipts tax part 2. Okay, for those of you that didn't join into our presentation last time, my name is Kate Odo. I own Odo Financial Services. Among other things services we provide to business owners, we provide full service bookkeeping and training of small business owners on various tasks related to their business. We offer a variety of services to businesses, from cosmetic companies to farmers. We work with everyone, and we try to tailor our services to meet the business owner's needs. I am really excited about doing these trainings because I feel like there's not a whole lot of accessible information to the average business owner. And so I really enjoy making information that is otherwise written in accounting speak or legal jargon, understandable and relatable to just everyday people who may not spend all of their time updating themselves on various law changes and things like that. So excited to be here with you guys today. Oh, I went back. Sorry, guys. Okay, so New Mexico follows a destination sourcing approach in determining where a transaction has taken place and what the correct rate is for gross receipts tax purposes. So basically that means, except for some exceptions, the reporting of the location is generally not where the seller is. It's where the merchandise or product or service is delivered. Okay. Now, there's a ton of exceptions to this rule. And so I'm going to go over several of these really common exceptions, and we're going to dive into some more detailed information related to how we determine what the location of the sale is. Okay. So one of the first exceptions that's very common is professional services. And when I say professional services, that's a very vague description. The state Taxation and Revenue Department defines a professional service as a service that's provided either in person or construction related services that requires an advanced degree from an accredited post-secondary educational institution. So that's a very specific guideline there from the state, right? So for our purposes, when talking about gross receipts taxes, a professional service is something that you need a master's degree or better in order to provide. Okay. And so that rules out a whole lot of services that we would provide to customers or clients as business owners. If you have a master's degree, but a master's degree isn't required to perform the service that you're providing, then it's not considered a professional service according to the state of New Mexico taxation and revenue. Okay. There are different ways of performing services that we talk about: in-person services, digital services, construction services. So I'm going to go over a few of those examples. So in-person services for gross receipts purposes is going to be a service that you provide physically with your client or customer in the same location. So for example, retail sales at a strip mall, or a hairdresser providing services to a client. Those are in-person services. And those services are going to be taxed at the location that the service or the product is provided. So that's really simple. If you have a brick and mortar location, you sell products or provide services to customers or clients in the same location all the time, then you provide an in-person service and your tax rate is always going to be where you're located. Okay, so that's fairly simple for in-person services. Now, as we go into other types of services, digital services are provided over the internet or by phone, and they are determined to be where the product or service is being first utilized. And that's how we determine the tax rate for those sales, unless it's a professional service. So for example, if you provide a professional service and you provide it digitally to your customers or clients, and you're always in the same place, your professional service is going to be taxed based on where you are located. So for example, CPAs, attorneys, excuse me, those services are always considered professional services, and those are determined to be taxed based on the location of where the professional that's providing the service is. So if you have a phone consultation or a phone appointment with your attorney, right, the tax rate for that service is going to be where your attorney's office is, not where you're physically located when you have that phone call. Additionally, when you get your taxes done, if you have a CPA that does your taxes, your services are not being taxed at the rate where you're located. It's going to be where your professional's office is and where they're performing the work for you. All right. Other types of digital services that aren't considered professional services, those are going to be determined based on the location of where the service is delivered. So if you're performing a service, I like to use the example of web design or marketing services. Those are not considered professional services by the state's guidelines. So if you are receiving marketing or website services for your business, or if you provide those services, the tax rate is going to be based on where those services are first used. So if they're first used in New Mexico, anywhere in the state, then we're going to go by the tax rate where they're delivered. Okay. If they are being delivered outside of New Mexico, we're actually going to go over that in just a second. I have a whole slide dedicated to services outside of New Mexico. There's going to be a different classification for that as well. Okay. Also construction services. So if there is a gross receipts from construction services, those are considered to be taxed at the construction site. So if you are a plumber or a carpenter, or you do any sort of building or construction related services, then the tax rate that you're charging your customer is going to be based on the site of construction, not necessarily where their office is or where their headquarters are. It's going to be at the exact site of construction. Okay. Transportation is one that we talk to clients about a lot. So transportation is really interesting, and that can be a lot of things. Transportation can be rideshare, taxis, it can be moving services. It can be a lot of different things, right? You can be shipping merchandise, products for a client. So transportation services, generally speaking, if you are providing a service that is in or out of New Mexico, if you're providing a transportation service where it starts outside of New Mexico and it ends in New Mexico, then the tax rate is at the destination in New Mexico. However, if it's intrastate transportation, so you're starting in the state and you're ending in the state, then it's going to be the location where the person or property enters the vehicle. So if I'm picking up some products in Albuquerque and I'm driving them to Los Lunas, I'm charging the Albuquerque gross receipts tax rate, okay, versus Los Lunas where my ending point is. If I am transporting goods outside of the state of New Mexico, I still have to charge gross receipts tax, and it's based on what point the property or individual enters my vehicle in that situation. Okay. Now, if your products or services do not, or your services rather, do not fit into that professional classification, they're not construction related. There's also some real estate guidelines that we did not include in this presentation. Then those are going to be based on the end user's location. So if you don't fit any of these other exceptions that we talked about, it's going to be where the product or service goes. Okay. Again, if you are providing a non-professional service to an individual, it's going to be based on that individual's location or that business's location. And so a lot of our bookkeeping or accounting softwares will allow you to choose, now that it's very common within the US, lots of other states use destination sourcing. There's lots of ways to incorporate this into your accounting software. And you can choose that the tax rate be determined based on where the end user is located or where the product is going to be shipped or delivered. And that will help you save time, save effort, figuring out the tax rate on every individual sale. If you use QuickBooks Online, it's really simple to just turn on destination-based tax calculations, and then you will get a report at the end of each accounting period, whether you're a monthly filer or a quarterly filer, to enter that information in the TAP portal based on how much you collected during that time period. You want to make sure that you check those settings in your accounting software, whatever software you use, to make sure that it's calculating for the correct destination. So a lot of individuals and businesses don't know that service providers out of state still have to charge New Mexico gross receipts taxes if they're providing services that are used in our state. This is a really common question that we get from out of state vendors who may be providing services into New Mexico or are thinking about starting to provide services in New Mexico. There's an out of state rate, and it's on the list of New Mexico current GRT rates. And that list gives you the rate for out-of-state service providers that are performing a professional service, and it's being used first in the state of New Mexico. They still have to charge that gross receipts tax and register with the state and remit it quarterly, monthly, however they're set up. So that's a really common misconception with our gross receipts tax, because in a lot of states, services are not taxable. Again, kind of backing up to that last presentation that we did, it's uncommon in other states for services to be taxable. And so that's one of the unique things that we deal with here in the state of New Mexico as business owners, is that services need to be taxed as well as products, or basically. So FYI 200 is where you find all of this information. And I wanted to share some interesting things from FYI 200 with you that may be related to other types of businesses, because they're constantly changing this. So the current regulations that we have on gross receipts tax went into effect in 2021. Okay, during the middle of the pandemic, people were not going out and getting information as widely. A lot of us were shut in to our businesses or our homes, working remotely. There were a lot of changes during the COVID-19 pandemic, and one of them was destination sourcing. Kind of coming out of that period of time where information wasn't as widely available, we're finding out as accounting professionals that a lot of business owners aren't up to date on the current rules. So I realize that nobody goes and reads tax law or tax changes in their spare time, except me and others in my field. But it's really important to stay up to date on the current changes. So the state of New Mexico FYIs is a really great place to find all of that information. And if you haven't, sorry, trying to find a way to pull that up for you guys. If you haven't looked through the New Mexico State FYIs, it's a really good place to find new information. All of these documents are searchable. They are all available on the website, and I strongly recommend bookmarking that website so that you have access to this information whenever a strange or unusual situation comes up. If you can't get a hold of your bookkeeper or your accountant right away, it's really great to just type in a couple of keywords, do a little fuzzy search, and get the information that you need. And it's also pretty clearly written in plain language so that it's not overly technical and overly legalese, if you will. So I strongly recommend, if you haven't checked out FYI 200 with the information on gross receipts, location reporting, that you do that. I'm also happy to send out a link to the document that Sophia or Gabriella can share with the group that's on our chat today, so that it's easily accessible for everyone. We get a lot of questions about marketplace sellers and sellers that don't have a permanent location. So there's a really interesting clause in FYI 200 that talks about an inherent peddler. So one of the kind of strange or unique rules that we have here is individuals who sell things, products on a first come, first served basis and operate from a temporary location are considered what's called inherent peddlers. If they don't do advertising and they don't hire employees, then they have their home location as their basis for their gross receipts tax rate, which I thought was really interesting because we have so many exciting pop-up marketplaces and lots of sellers that operate from different points at different time periods. So I thought that was really interesting to share with the group. If you rent your space, then you're not considered an inherent peddler. But if you're in just a temporary location selling art or some sort of agricultural products and you're not renting your space and you're not having to advertise to get business, maybe you have a really great spot on a busy street, then you use your home address. You don't use the address where you're selling the products as your basis for your gross receipts tax rate. So I thought that was really interesting. And given our very cool economy where we have a whole lot of marketplace sellers, that's something that not everybody understands or has access to that information. I also wanted to go over a few other services requirements. So gross receipts taxes for services specifically that are purchased at the seller's location and the reporting location isn't provided by the purchaser, would use the seller's location. So for example, if you are purchasing digital media or some sort of can't think of the word, sorry guys. It's not a tangible product and you don't have your customers' information as far as where they're physically located. Let's say it's an online transaction. Maybe you don't have a delivery address. Maybe you don't have all of the necessary information for determining what location your client is in. Then you just use your own seller's location to determine gross receipts taxes. The state is very, understanding. I've been with a few clients through audits, things like that, where you may not necessarily have all of the information. And so that's actually something important to know because if you are in an industry where you don't have every single piece of contact information for all of your customers, then you just use your own seller's location. Trying to think of other examples of what that would be besides digital media, or there's got to be some other examples. So if you're on the chat, if you're in this group with us and you have a product or service that you provide where you may not necessarily know where all of your end users are, I'd love to hear about some examples of that, maybe field some questions on that if we have a little bit of time, which I think we're gonna have plenty of time. If you have some really interesting things that I got here from FYI 200, if you don't necessarily know where your client is, or maybe your client or customer has moved, and you have maybe old information for your client or your end user, we have to use whatever the most recent information is in the seller's business records. So let's say that you don't know exactly where your end user is. and you have an address, but maybe you think it's wrong or outdated, we're still supposed to use that for the GRT calculation. Even if we think it might be not current information, we're still supposed to use whatever the most recent information in the business records for the seller. Let's see. If you don't have sufficient information, you use your own. And I've never seen this, but somebody actually pointed out to me recently that I thought was very interesting, because I have worked with a business that does simultaneous delivery to multiple places in the point of at their point, like their point of sale is multiple locations. So somebody pointed this out to me actually last week, and I thought it was very interesting to add to our presentation today. If there's a single transaction and there's multiple deliveries, and the deliveries are going to be delivered on the same day, let's say, to multiple sites, like let's say you're a good example would be a launderer of like linens, or for restaurants or hotels or uniform supply. If there's one purchase and you're taking the proceeds of that purchase to different locations throughout the state or throughout the different localities, then you would use the one singular location of the purchaser wherever they're located. So a good example of that, kind of rambling a little bit, sorry. A good example of that is if you are managing a string of hotels in different areas, and you have like a linen service that's delivering these linens to your multiple locations, wherever your office is located is where the GRT is going to be calculated. So that's really interesting, because I can have something sent to Santa Fe and Albuquerque and let's say Los Lunas, but because I'm the purchaser and I'm in Albuquerque, my office location is going to be the location that determines the tax. So that's really interesting if it's one transaction. Now, if it's multiple transactions, let's say I pay for the Santa Fe location and the Albuquerque location and the Los Lunas location separately on 3 separate, let's say, credit card transactions, then it's going to be determined by where the product goes. So let's say the delivery in Santa Fe has Santa Fe's GRT rate. The delivery in Albuquerque has Albuquerque's GRT rate, and then the one in Los Lunas has theirs. So that's, I think, a really interesting kind of loophole or specificity of our GRT here. And a lot of states do not do it this way. I'm kind of curious because I see the chat is kind of going up. So I'm going to kind of look at some of these questions and go through a few of them. Oh, okay, here we go. So Heather Gomez said, what about an Airbnb located on the reservation? The reservation doesn't charge tax, but the Airbnb does. So Heather, I'm just going to ask you, because I'm not extremely familiar with how Airbnb does their tax withholdings and how they assess. Do they charge gross receipts tax for you and then remit it on your behalf, or do you charge it and remit it on your own behalf? Heather, if you could put your answer in they charge it and they send it to you directly for you to send to the state. Oh, okay. All right. So that's interesting. So you have an Airbnb located on a tribal land, and they're charging gross receipts tax. It sounds like probably the state level is what I'm assuming. Yeah. Okay. All right. So then you would remit that to the state based on just the state level. So when you log into your TAP account, your taxpayer access portal, you're going to choose when they give you the option of the different localities, you're going to choose New Mexico State and remit that portion. The reservation on its own doesn't necessarily collect that tax, and so you don't have to remit it. But if you're looking at the tax rate, so we have it's at least two rates depending on where you're at, possibly three. So to break it down, you have a state rate, which can change every 6 months in January and July. And then you have a county rate. So no matter where you're at in New Mexico, you're usually always within a county, but you don't remit that if you're on tribal land. And then a city rate if you're within city limits of a specific town or city in the state. So Heather's example would be just the state rate because the tribal location does not collect any locality specific gross receipts taxes. So you would remit that based on just the state rate. It's actually kind of nice that they calculate that for you and remit it to you to then pass on to the state. That sounds like that's a really great way that they have. Some, if you do online sales, let's say you do Shopify or PayPal, a lot of those online sales channels will collect and remit the tax for you. So if you do any sort of online product sales, you want to find out from whatever platform you're selling on whether or not they are in charge of your gross receipts taxes or whether you're in charge of that. Whether you have to collect, file, and remit it, what their process is, and how they're involved in that. A good example is eBay. eBay will collect, file, and remit the tax depending on the type of seller you are. And so online sellers with eBay usually don't have to file and remit their own tax to the state. But that's a really cool example, Heather. And that's also really nice that they take care of that for you. So that's very cool. Let's see if we have any other questions in the chat. Is anybody else curious about their own specific situation? You're
Hey,
very welcome, Heather.
hi, Katrin. Actually, I see some questions in the Q&A, so maybe I'll read them to you.
Oh, I think I'm in the wrong chat then. I see the Q&A as
There's two.
well.
Yeah. So one says, Griselda says, I'm a consultant. I train entrepreneurs nationwide, sometimes hired through a third party to serve cohorts. I don't always have the information of the participants.
Okay.
Mm-hmm.
So that is a little bit broad. So I want to kind of narrow that down just a little bit. Griselda, thank you for your question. So you train entrepreneurs nationwide to provide services or to provide product sales. Can we narrow that down just a little bit?
And hopefully she can type quickly.
Okay.
Oh, there you go.
I train them to launch their business. Okay. Oh, that's one. I bet there's a number two coming. I think I misunderstood the question. So you're asking what your gross receipts tax liability is, not theirs. If you are training them, okay. So you're training individuals, I assume, in some sort of digital fashion, Zoom or some sort of video call or phone call or online to launch their businesses. And those are likely in or out of New Mexico, or maybe you're not sure. I think I'm probably assuming that correctly. So if you don't have the information, if the information is not available to you, if they're sort of anonymous, the state guidance that we were just kind of talking about says that if you don't have the information, then you use your client's information. So for example, whoever hires you to perform the service, then you would use their destination. If the service is first used in the state of New Mexico, so if your clients are local and the service is being utilized in the state, then we charge gross receipts taxes, right? Depending on where they're at. So if somebody in the state of New Mexico hires you to provide a service and they don't tell you where the end users are, then you're going to go with whoever hired you to perform the service. If whoever hires you to perform the service is outside of New Mexico and you have no reason to believe that the service is going to be then used in the state of New Mexico, then it looks like that you would not need to be assessing those gross receipts taxes. However, I would strongly encourage you to contact somebody, a professional, myself, or someone else, to go over your specific business model and make sure that that's the case for you. Okay. An anonymous question here. If the professional service provider or even a non-professional service provider is in New Mexico or for a remotely provided service and the client is out of state, the transaction is GRT exempt. Not necessarily. So it depends on what type of service. The state language, and it's a little tricky, but the state language says, I'm going to read it just because it is, oh, I've buried it. There we go. Okay, so if we're talking about a service provided, a professional service, and it's out of state, whether performed in New Mexico or performed outside of the state, where the product of the service is initially used in New Mexico, then it's considered taxable for gross receipts purposes. So basically, what that means is whatever the end product or service is, if it's initially used in the state, or then it's taxable for gross receipts purposes. If this product or service goes out of the state and it's never used in the state of New Mexico, then it's not taxable for gross receipts purposes. And so depending on the type of service, there's also actually, before I say that, there's a specific rule about research and development services as well that we did not go over in this presentation. So depending on the type of service that you're providing, it could or could not be subject to gross receipts taxes if it leaves the state. And that's going to be dependent on the type of service and if it is possible that it's being used at any point in the state of New Mexico initially. Let's pull up our question and answer again. Oh, cool. I think we got through all of those. Anybody else have any situations that maybe we haven't gone over? I know this is a little tricky, and for some of us, it's not super clear. And that's why I would definitely suggest for those of us who have maybe non-traditional types of services, or we're not really sure if those services are initially used in New Mexico, I would strongly recommend contacting a professional, just getting some specifics based on your own industry what that looks like. We talk to people that are in the healthcare field that provide services out of state. Those are very specific. If you're providing architectural or engineering services, those also have some very specific rules regarding, whether they're tax or non-tax. So I would definitely contact a professional and talk about your exact service providing and how it's used and where it's used to determine whether or not it meets the destination sourcing requirements for the state of New Mexico. All right, we got 15 minutes left, guys. I'm here for any questions that you have. Something in the chat here. Okay. Ifoma, please, if I'm pronouncing your name incorrectly, please don't hold it against me. I'm so sorry. I would love to chat with you and talk about your specifics. If you'll reach out, I believe Sophia can get you on our list for consultations. We would love to chat with you and figure out your specifics. Sophia, is that right? They just get in touch with you to get on the list?
Yeah, yeah.
Awesome.
If Fiona is already on the list. So
okay, cool. Sorry, I don't have it in front of me. I apologize.
Yeah. No worries.
Yeah, awesome. We will absolutely reach out and get you scheduled. And we'll get some more specifics about your situation and how this could possibly affect you. Anybody else have anything that they're curious about? Anything maybe not related to destination sourcing, maybe just gross receipts tax in general? Whether or not it applies to you or how to do it or any of the things. I'm here for those kinds of questions.
Hey, I just wanted to confirm if you answer the question that is still in Q&A section.
Did I miss one?
It says from Anonymous. It says, is the professional service provider or even a non-professional service provider is in New Mexico for a remotely provider service and the client is out of state, is the transaction GRT exempt?
Right, so that's the one we just went over.
Okay.
It depends on the type of service that you're providing, and it depends on if it's a professional or a non-professional service. And so that would be specific to whatever types of services you're providing. The person who asked that question, if you'd like to give us just a little bit more information about what kind of service you provide and where it goes, I would love to kind of dive into that a little bit more with you.
It seems like participants are shy this morning. Well, it's afternoon already.
That's okay. I was always the person who didn't like to raise my hand in class, in school, in college. I never wanted to say the answers out loud. So I totally understand. I'm really a numbers person and not necessarily a look at me kind of person. And so I totally get that. If you guys have questions that we weren't able to address today, that's okay. I'd love to speak with you one-on-one. Or even if it's not a good fit with me and you want to reach out to somebody else in the industry, that's totally fine. I want to make sure that your questions are answered and that you're comfortable with the information that you get.
Very good. Well, while we give a little bit more time, Kate, are you done with the presentation? I know we're doing Q&A.
So, yeah, so this is it. Sorry, next slide is, oh, see, now I'm going backwards. Yeah, there we go. Questions.
Perfect. So while we give people to continue thinking and maybe being brave to ask a question, if it's okay with everyone, we want to make sure that, you know, the folks that we have been getting on in BDA to do all this amazing work, they are amazing and we want feedback for NBDA and also for Kate today. So I'm going to launch this poll. It's going to be just a few seconds. Free to add, you know, what's your overall evaluation, excellent, good, fair, or poor, and then any additional feedback that you want to give either to Kate or myself, and then I'm happy to pass it on. I mean, I know it was great, but you know, we can always be better. So that's I'm just gonna leave it off.
Always.
I'm gonna leave it
Yeah.
off. So we really appreciate, you know, for all the attendees to just quickly just do that. I'm sure it's showing up on your screen. And meanwhile, while we're doing that, maybe I'll just talk briefly about the upcoming webinar so that everyone can register. So this Tuesday, March 5th, we're actually having a webinar that's a little bit different, but it's if a business is interested in working in the film industry, we're going to have the film office, we're going to have a film production manager join, and we're going to have a business that's been really successful in getting contracts with the film industry. So it's going to talk about the pace, you know, how fast you have to be, how you have to be available. So anyway, it's going to be Tuesday, 9:30 a.m., free of charge. We'd love to have you. And then on Thursday, that's March 7th, we're going to have our first webinar this year on social media essentials. So this is a really great one because if you are someone who wants to have a more presence online, after attending the webinar, we will also give business owners that are interested one-on-one services with an accounting firm where they, sorry, not accounting firm, a social media firm, where they're going to be able to get a few social media accounts created. So for example, you always wanted to have a TikTok account or you always wanted to have a LinkedIn account and you're not really sure how to do it. This expert will help you create that and even create the content so you can put on it. So again, Thursday, March 7th, social media essentials for small businesses at 1 p.m. So that's two already webinars next week. And then March 12th, we're going to have Kate again Tuesday, and that's going to be on chart of accounts. Yay. And then on the 14th, it's going to be on a part of the business plan. So creating and writing your business plan. So many great webinars. That's just in another couple weeks, but we have literally a webinar every week, sometimes two, for the next like 4 or 5 months. So a lot of work. Okay, I'm going to end the poll. Thank you. Thank you. And let's see. Any other questions from anyone online? If not, Kate, we so appreciate your time today and everyone attending on a Tuesday afternoon. Again, everyone, this will be recorded, so you want to go back to our YouTube channel. If there's like a little part that you wanted to hear again, feel free to go to YouTube channel or share with your friends so that we can all be informed. And I will see everyone soon. Everyone, have a great afternoon, and we'll be in touch. Thank you.
Thank you. Have a great day, guys.
Thank you.